We have Aditya Arora joining us on the show. A very good afternoon to you, Aditya. And looks like this week, unlike the previous weeks, we've started on a good foot. But where do you see the markets trading at this point in time, the range that you're seeing for the benchmarks?
Very good morning, and hopefully it's a cheerful morning for everyone on the Dalal Street. And we can see that on the screen. And what I like today is the leadership in a lot of large caps, and the leadership by banking name, which is pulling Bank Nifty almost 1,000 points higher, Nifty almost 200 points higher. So the early trends are very encouraging. And if we had to compare Nifty and Bank Nifty, then Bank Nifty looks really good and is in a good position to touch new 52-week highs.
Okay, apart from that, there have been multiple stocks that have been buzzing in trade, be it Power Finance Corporation, Biocon. Obviously, there are fundamental reasons behind it. But technically, how is the PFC looking like on the charts?
PFC is looking good, but I think if you look at the trend of the Nifty, then overall the market is in corrective structure. So whatever bounce back comes on individual stocks, it is usually short-lived in the current scenario. At least that's what we saw in October. Right now, the structure for PFC is good, but 500 is an important resistance for the stock where a lot of call writers are active. So I would maintain neutral to positive stance on PFC.
All right, so that's the take coming in on PFC. Then what's your take actually on the FMCG pack, Aditya? Because things are not going too good when you talk about the consumption area right now. What's your take and how should one actually view this segment?
Right. Usually, FMCG acts as defensive space whenever there's correction in the market. FMCG outperforms, but this has been not the case this time. But important positive thing is that FMCG index is trading at 58,320 and 57,000 to 58,000 is an important support for the index. So I believe there could be some time correction in this zone, and after forming a base, there could be a rebound towards 60,000 to 62,000. So I remain neutral to bullish on this space, and a lot of large caps in this index, Nifty FMCG are looking interesting. I believe after forming the base, even individual counters can start performing well.
Okay, Aditya, if you look at the Nifty IT index in the last 1 month, the benchmark has fallen, the broader market has fallen, but Nifty IT index has continued to hold on. The fall is literally negligible when it comes to the Nifty IT index. In fact, after the US Trump win in the US election, also whatever losses we had seen, the Nifty IT index has been able to recoup all of that. So, how is the Nifty IT index looking like on the charts? Do we expect the upward momentum to continue?
Yes, we can expect the upward momentum to continue. And currently, Nifty IT is trading at 42,670. We can expect it to touch 43,500 to 44,000 in the short run. And there are some fundamental triggers also. Look at NASDAQ, which is trading at 52-week high, whereas Nifty IT hasn't given that kind of a return. If you look at year-to-date returns and if you look compare it to NASDAQ, then there's a wide margin. So this margin could reduce, and there could be a mean reversion trade on the upside. Hence, the outlook looks neutral to bullish on Nifty IT space.
So Aditya, what are your top picks in the current market scenario then?
My top pick is HDFC Bank. It looks interesting after consolidating for a long time now. Stock is poised for a good breakout. So this one is a buy at 1780. Stop loss is 1740, and target is 1810 to 1850.
Well, thank you, Aditya, for joining us and giving us all those details.
If you like this video, then like, share and subscribe to ET Now.